Hi, I'm entrepreneur and property expert Neil McCoy-Ward, and in today's video we're going to talk about the truth behind Section 24, aka the government tax grab against landlords. Now, we've been told a lot of things by the government, such as it's only going to affect 25% of landlords. At the most, it will affect 50% of landlords by 2020. However, I actually own a property management company, a substantial one in the West Midlands, and I have a lot of landlords. So I've done some independent research myself with every single one of my landlords. Every single one has taken part, has come into my office, or I've gone to visit them, and we've done a quantitative analysis, and it's absolutely unbelievable. I'm going to show you 3 examples in a moment on screen, but it's unbelievable. This doesn't affect 25 to 50% of my landlords. It affects 95% of my landlords that have a mortgage. So let's go to the screen now, and I'll show you how this is going to impact you as well, and the calculator that you can use to calculate your tax liability. Okay, let's look at these 3 examples then now, and I do have permission to share these 3 landlords' information. We have David, Simon and Dalji. David is an accountant, Simon is an engineer, and Dalji is a GP, all with different amounts of houses. So what we're going to use is the Housey calculator. You can see the URL just here if you'd like to use this. But please note the caveat to this and the video itself. The calculations provided are for guidance only. Each landlord's situation is unique, and you should seek professional tax advice before implementing any measures. So Housey cannot be held responsible for any loss directly or indirectly. So with that said, and that you understand and agree to that, we will go on to this. So we're going to start with David. He has 3 houses, and his gross rental income per month is £2,200. He earns £27,500 as an accountant. His mortgage interest is £1,500 of the £2,200 per month. His running costs are very minimum because we manage everything for him, so he doesn't have huge overhead costs. He also doesn't have any letting agency costs. So let's calculate this. Straight away we can see here estimated tax bill increase £1,820. So this shows you as at now, this shows the gradual increase, and this shows the new rules as of 2020. So you can see it's fairly substantial. Right now David is making £5,280 profit per year on his 3 properties, plus the capital growth. That's the great thing. That's the benefit of being a landlord. We do get the capital growth. And you can see it's not really changing at all until 2019, 2020. And then 2020, 2021, you can see, again, this is where the big drop happens. So David's net profit goes from £5,280 to just £3,460 when this fully comes in, which means an increase the tax bill of £1,820 per year. So that's the probably the lightest of the examples. The next one is Simon. He's an engineer, and he has £1,700 of gross rental income. He earns £32,000 per year. His interest is £1,200. His running costs are £100. And he, again, has no letting agency fee. So this is 2 houses that Simon has with us. Again, a tax bill increase of £1,640. Here's the calculations again. So as at, where are we, 2018, 2019, £3,640 is his net profit per annum, which will go down to £2,200. Now, the biggest problem with all of this, and you can see the increase is £1,640. The biggest problem is that, this really is unfair, unreasonable, and some people are going as far as to call it a huge scam. And the reason for that is that if you look at any business in the world, and let's say a government said to any business, I'm sorry, but as of tomorrow, you're no longer allowed to claim any expenses. You're going to be taxed on 100% of your income. 90% of businesses around the world would go bankrupt. They would go bankrupt the next day. But yet, the government's doing this to us as landlords, knowing that we can't do anything about it. There's no way around it. I know some of you are probably thinking, well, you can incorporate, you can do this, you can do that. Yes, but you're still going to get, let me ask you this. If you incorporate, you're going to have to do all the transfer. So it's a separate legal entity to you. So there's going to be stamp duty, there's going to be other fees involved as well as the legal fees. Now, how do you get that money out of that limited company? Well, you're going to have to pay yourself personally. So again, you're back into the same situation as you are right now, except the only difference is you're going to be able to offset the interest on the mortgage, but you've still got 19% corporation tax that you're going to have to add on here, as well as how are you going to pull it out? You've got dividend tax, or you've got your salary tax again. Now, in the final example, this one is absolutely shocking. This is a landlord of mine. He's been a landlord of mine for a long time now. Really nice guy. He's a GP. His name's Daljit. So let's go through the figures for him and his family, because it's really a family portfolio, but most of it's in his name. He has £12,000 of rental income. His salary, he didn't want to give me the exact amount, but he said, his average for a GP around 75. So £75,000, nice salary. His mortgage interest payments are £7,500 per month. His running costs are £2,400 per month. And his agency costs are £1,000 per month across his portfolio. Now, we don't manage most of his portfolio. We only manage a small amount because amongst the family, they have a lot of properties. And the good thing about Daljit and his family is that they're really nice, honest people. They're good landlords. Their properties are really, really high standard. Whenever there's a problem, they come out straight away. They deal with it. They're good landlords. They're not rogue landlords. So this is what's going to happen to them. I mean, this is absolutely shocking. If you look at the increase tax bill, look at this. That's the increase. It's just almost unbelievable. An increase of almost £24,000. And here's the figures here. Their net profit right now, because he's not looking to make a huge net profit. He's doing this to invest, to build up capital growth, to pass them on to his children. Good. He's a good, honest guy. Net profit, he's making about £8,000, which he isn't really that interested in. It's really the capital growth. But look, as the time goes by, I mean, already he's seen a loss. I mean, his tax return this year, he said, was a shock to him. It was a big dent. But, I mean, just look at how this is going. Over the time, 2017, 2018, it went to that. His 2018 to 2019, which he hasn't filed yet, but that will be filed shortly, he'll be losing £5,500. Next year, he will be losing over £10,000, and in 2020 to 2021, he will be losing £16,000, which when you add it into his salary as well, because remember he's being taxed now not just on his salary but on the rental income, not allowed to offset any of the interest payment, which is unbelievable. I still can't believe that. It's just outrageous. His tax bill has gone up by £24,000. I mean, look at that. Imagine getting a £16,000 tax bill. It's just unheard of. Thank you so much for watching. Make sure to click the subscribe button and turn on updates so you get each new video as they get released. See you on the next video.